What are the top stocks for 2026? We're going to find out today what my top picks for stocks are in 2026 right now, as well as some notable mentions and some Hail Mary plays that I'm also very interested in going into 2026. But before we get going, check out the channel memberships at that soda straw level there, the very lowest level. You're going to get the TC indicator, which has been doing some amazing things lately. You're going to get the daily SPY thoughts that I put out every morning before market open, which plays very well into some levels that the TC indicator might call out as well. You're going to get the daily scanner results as well that show you some possible tickers that TA may be worthwhile looking at. And all that just at the soda straw level. And if you want the real-time trade posts and members only videos, you'll go down to Stalagmite and get those there to see exactly what I'm doing and when I am doing it. All right, so top stocks I'm watching for 2026. These are going to be my high conviction stocks. We're going to take a look at them. We're going to take a look a little bit at their financials, mostly cash flow and net profit margins. And then we're going to also do a little bit of charting on each of these. We're going to be as quick as we can because I don't want it to be super, super duper long. And then we'll take a look at the notable mentions and the Hail Mary plays. We're not going to do as much with those as we are with the top 10. But let's get right into it. Before we get going, smash that like button if you like this content, want to see more like it. Help us push that video out to more viewers. I appreciate every single one of you, and we're just trying to grow that community because the TC community is fantastic. So smash that like button. Subscribe if you've been with us for a bit and haven't done so yet, or you just got here and you want more of this stuff. Subscribe, like it, get it all moving around. All right, so let's take a look here at this first. Let's go through the list real quick. So we're looking at SOFI, which is going to be digital first financial platform, a digital first financial platform offering banking, lending, investing services, all that stuff. There's a few tailwinds on them right now, and they have a great CEO. CGNX, Cognex, they do vision for machines. Basically, they're going to be the eyeballs for robots, and everybody's excited about robots, especially those humanoid robots going into 2026, and they're sitting in some interesting technical levels. So I think that there's a lot going on with CGNX. Marvel Technology, they're in the semiconductor space. They also have something that they're doing with photonics that's pretty interesting, and I think it's going to be very important as data movement is going to be the next level move for AI, how quickly data can move around. And I think Marvel has some exposure to custom chips as well as photonics. Tyson Foods, food stocks have been beaten down for a while. I think they might have a resurgence in 2026 as we start looking for value. ARM Holdings, that is the architecture, the backbone of mobile AI, edge computing. ARM has it going for them there. There is a risk there with risk V as another architecture that could be used for AI compute, but ARM has the lion's share currently. Amazon's been beaten down for 2 years now. They have robotics, they have AI, they have web services, they have custom silicon. Amazon is a beast. I don't think we're going to see them do a third year down. Apple has been coming down because they've been lagging on AI. I think this is the year that Apple potentially flips the script on that, gets AI in your pocket and stops falling and starts climbing. All right, Oscar Health. We just saw the Affordable Care Act get extended another 3 years. Oscar, as well as companies like UNH and MOH, those are the tickers, not the names. They will be direct beneficiaries of the ACA subsidies extension, and I think we're going to see, as we have been seeing, continued cash flow into healthcare through 2026. Vistra Energy, they've been getting beaten down dramatically for a while now, but they have just locked in a nuclear deal with Meta. They're a huge electric power player. I can't imagine they're going to keep falling very long. I think they're going to possibly go sideways and pop back up later in the year. Target has been absolutely demolished. Okay, absolutely demolished. Hit lows in the 80s. It is now back over $100. I am targeting another 20 to 30% upside on Target for the year as Wall Street starts to buy back into Target after absolutely destroying it for years. All right, let's go look at these charts real quick. So we're going to start with SOFI. First of all, let me get this. All right, so first of all, SOFI is very interesting, especially if we do this. We go and we take the bar here, and we go, let's say December, and we'll go forward like that. Okay. Now let's go find December. Somewhere around here. Oh, look at that. Doesn't that look super duper familiar, right? Okay. If we're seeing this here. Let me go ahead and just draw it for you. Let me get rid of this. This is just too confusing with all the other drawings. Let me just turn off my drawings. Okay. Here we go. This little section right here looks a lot like this section here, but it had that nice buildup, right? And then that crash, a little bit of sideways, and then as soon as it came out of that sideways, it just roared up for the other half of the year. I think something like that's going to happen again. I think SOFI is going to do this move here. We're going to get a bit of a waterfall effect. We're going to go sideways, and then somewhere near the second half of the year, we're going to start climbing right out of this thing. And it's going to be very dramatic. We're probably going to go a lot higher than 34 when it happens. So would I buy it right now? The only way I would buy it right now is if it broke this, like if it came above that trend line and started going higher. That's the only way I do it right now. Otherwise, I'm waiting for this sell-off like back here, where we came back down to, in this case, I'd be looking around 21, 22. And then I'd be looking for a bit of sideways action and then a breakout and retest of the top of that channel, and then continuation up for 40, 50, maybe even $60, maybe even a double up from where we are right now. Now, do I think that's going to happen right away? No. So like, let's look at the previous peak to this peak. Yeah, it was 77% after that huge dip. And we're looking like we're primed to do a similar move. Because like, look, this little section here, this run up and sideways action looks a lot like this run up and sideways action, followed by a drop. Remember, next week, the Supreme Court's going to make a decision on tariffs. Remember this drop right here, that was all due to tariffs. If they deem the tariffs illegal, we're probably going to see a swift sell-off. We might hit this 200-day moving average down here. We might hit this 50-week moving average right here. Somewhere in this vicinity here between 23 and 21, I am looking for SOFI to find a consolidation, maybe dip a little further, and then once it's back above 23, I'm looking for it to launch into the 30s, 40s, maybe even 50s. Okay, let's go ahead, take a look at their financials real quick. So since they're a bank, they don't get the cash flow look, but we can look at their earnings. And over the years, it's just been going up, 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 up. Notice how all the green dots, they constantly beat over and over and over again. Also, if we look here at the net margin for the quarters of 2025, we had 6.8, 8.6, 11. Last year it was 13. So unless Q4 is really good, they're probably not going to beat that. So that will also feed into that early first quarter, second quarter drop off. So I am waiting for that first. I think SOFI probably has some downside first. And then once that is over, I think once it's done, that we start to come back up again. And on the lowest low, I'm looking at about 20. That's kind of where I'm looking. Like if we come in here and we look at the weekly, yeah, that 50-week moving average is somewhere around 21, 22, and then the 200 is all the way down at 1486. Let's go ahead and change that up to be a 100 and see how that what that looks like. Let's check out the 100 real quick. The 100 would be about 18. Okay, so yeah, I'd be watching anywhere between 23 and 22 for SOFI, and then from then on, I'd be looking for it to go for a nice big move up. All right, let's go take a look at the next one, CGNX. This one's going to be a little bit further out on the risk curve. If I could type, it's going to be a little further out on the risk curve than SOFI. We come to a daily. There's a couple of things I like here on the daily chart. One, we had some bullish divergence back here on the RSI back on December 15th, and it has come back up to that same base level, but look at the RSI still only at what is that, 60? It's under 62. Still looking pretty good. The stochastics, while the fast are at the top, the slow are still building momentum. So this thing I'd be looking for a move up to like 44, maybe even back to the top range of 49, especially if they make a deal with a big company for building eyes for humanoid robots. Big deal. So here's the things that I like here. So I like that we've been in this range. Okay, I like that we've been in a range. I like that we made a double bottom here and another little double bottom right there. Notice how this double bottom is feeding into it coming up to here, which was the neckline, I guess you could call it, for the larger double bottom there. And if we get above this, we are definitely going to move up to that volume spike, maybe even to the top of the range around 50. So I'm watching that for CGNX. And their tailwinds are that it is likely the year of robotics. Everyone's very excited about it. Let's see here. We could see a move up to 13 to 26%. And given that this is the 4th year of a bull run, I would not expect the SPY to give you, much more than maybe 9 or 10%. If you're lucky, probably closer to 8. At some point, it's got to average out to that 10% per year of return. And we've seen back-to-back double-digit returns. 1 year was 30, 1 year was over 20. This year was like 14, 15%, something like that. So I can't imagine the SPY giving another return of that nature. So again, now we might see that spill. Like if we get bad news from the Supreme Court next week, this could come all the way back to the bottom of this, maybe do a little move down into like $30 range, in the $30 range down here at the edge of this volume profile down here, around 30. Around 30 bucks, I'd be pretty interested, because like we'd be in a nice little downtrend, right? We'd come down to like halfway to the bottom of that downtrend. I'd like to see it come tap from above and start crawling its way back up towards 50. So if I hit 30, yeah, I'd be very interested. And if it did manage to hit 30, if it did manage to hit like 30 bucks and then find its way back up to 50, I mean, you're looking at 60%. So that's not bad if that is to happen. So I'm waiting. I'm kind of just being patient right now. I'm trying to be patient, right? Because I mean, if we come over here and we look at the 50 and the 200-day moving averages, they're starting to curl over. Like like this one was coming down and starting to go flat. The 50 was coming down and starting to go flat. Once those start to curl back up again, this thing's going to really, really get lit up and start flying up higher, especially if they can get a really big, good deal with some robotics companies for optics. So let's go take a look at their financials real quick. So we can see their PE currently at 70 for the quarterly. Let's see, about 58 for the year. Not great, not bad. They're still pretty expensive. Like, they're pretty expensive, but the price of sales is only 6, so that could go a lot higher. Not too concerned. They're only a $6 billion company. That can go way higher. I mean, if it goes to 100 billion, it's well over 10x, right? 63 billion is a 10x on price, and a 10x from current values in the 40s, right? Are we in the 40s? 39. That's a $400 stock. So you know, what do you think about that? Let's take a look at their annual revenue here. The margin, it was 11%. It was falling since 2021. 2024 was a pretty low at 11.61. And then for 2025, we had 10.9, 16.26, and 6.38. So it's going to average out to not too much different from 11.6 unless Q4 is pretty big for them. Hopefully, we'll see soon what that comes out to be. But if we come down here, this is what I like. This is what I like to see right there. That is a free cash flow to cash on hand to debt sort of chart that is reminiscent of something like Palantir. And this is a hardware company. This isn't even a software company. This is a hardware company. Look at the years, how that middle line is the free cash flow. Look at how their free cash flow absolutely dwarfs, even in a bad year, makes their debt look small. They've got almost no debt, guys, almost no debt. So yeah, I'm looking at that, and like, look at this, their financial positioning over here. Look at their cash to liabilities, assets to liabilities, wildly putting the liabilities in the shadow of their assets. This is very interesting. Oh, they also have a tiny little dividend yield. So this is one reason I'm very interested in this company. They want to do optics for robots. Robots need optics. They need to see the world that they're interacting with. Okay. So what am I looking at here? So we got too many lines. Never mind. This trend line down here, I'm watching that, okay? Because if it comes back, I'm looking for it to bounce off of that. If it comes beneath this and tests it from below, I'm looking for it to come down to 30. It hits 30 due to some tariff news or some other wild thing that happens in Q1, early Q2 2026. Well, then it hits down here. I'm going to buy for a big old run up. Okay, you better believe I'm going to go hard on that. You don't see free cash flow debt like that. Okay, you just don't. There's not too many companies doing that, especially in a hardware company, especially in a small hardware company that has the potential to become a big hardware company. So I'm very interested in CGNX for that this year. Hopefully we get that. Now, but of course, remember what I've been saying over and over and over again. Q1 or Q2 are going to be excessively dangerous. I am not deploying a large amount of cash to anything in Q1 or early Q2 of 2026. Let's take a look at Marvell. How is Marvell Technology? We're talking about their semiconductor company, but they also have that photonics angle that they work on. So Marvell, what's going on with Marvell here? We're hanging out and have been hanging out at their 200-day moving average for a really long time, with tops outs around $96 to $104. Okay, this is the range. This is a very sideways zigzaggy pattern. As soon as it is done with that, it is going to be explosive. Okay, it's going to be explosive as soon as it is out of this channel right here, this zigzag pattern. Now, that could go one of two ways. All right, that could go one of two ways. First of all, look at last year. Right, look at last year. April, we had another similar thing going on last year, right? Okay, except we were doing that dance with the 20 and the 50. Okay, we had a nice little channel going right here and right here. And what happened? We broke out of it once, twice, came slightly into it, and then really sold off down. It tried to recover in March, sold down, and then we finally got a double bottom that did a very slow grind out of. Before doing a little bit of more of aggressive, before another sideways, before another fake out down, before finally starting to break out again. Okay, so that could happen again right now. If that were to happen again right now, I'd be watching like the high 60s, this volume spike right here, maybe low 70s for this thing to come down, tap, and go higher, or if it gets bad, come down, tap this one, and go higher. This little island right there, back in September, October of 2025 would be the area I'd be watching for a potential drop on Marvell. So like 60 would be my lowest low price that I would expect on Marvell, and if it hit that, if it tagged that, you better believe I'm going to go heavily into Marvell at that point. If it breaks out from the upside, right? If we get an upside move, touch from above like this, and then it's starting to continue, yeah, I'm going to be targeting up here in the 120s, 130s. I'm going to be looking for a 30% move from there. I am also really watching this trend line right here, because if it bounces off of that, or it compresses into it, like let me do that, like let me do the line, and if price does a compression into this and then does like a little pop-up breakout, you better believe 130 is on the table there in that situation as well. If it breaks below it though, we're going to hit this volume shelf here, maybe even this little island down here around 60 bucks. So those are the two things we're watching on Marvell. But Marvell has a lot of potential right now. It's in all the right sectors at this time. It is wildly sold off from, not wildly, but pretty heavily sold off from its peak up here. From its peak, I mean, it sold off 62%. We're still about 34% off the peak. Okay, let's take a look at there's some of their financials real quick. Okay, let's take a look. Currently, they don't have a PE. They have price to sales of 16. Their PE is, well, basic earnings per share 2.8. Yeah, okay, so they're slightly profitable. They got a PE of 32, which is pretty low. Price to sales of 9. You can get way higher than that. Remember also that they're only a $70 billion company. They're only a $70 billion company. So they could double up pretty easily. They could triple up pretty easily. I mean, look at what happened to AMD. It went from like 50 or something billion odd dollars all the way up to hundreds of billions of dollars in a couple of months. Now, I'm not saying Marvell was going to do that exactly, but I wouldn't be surprised to see it at 150 by the end of 2026 or early 2027. Wouldn't surprise me. Okay, anyways. Okay, we'll take a look at their net margin. Has been negative for about 2 years now, but in 2025, you can see it was positive, and then in Q3 of 2025, it went up to net margin of 91%. Net margin of 91%. Hold on. We need to go look at NVIDIA. What's their net margin last quarter? What was their net margin last quarter? 55%. Marvell's last quarter net margin was almost double NVIDIA's. Okay, that's why I'm watching Marvell. They're increasing their net margin dramatically. We come down to their cash flow to debt. Yeah, they have heavy debt, but look, their cash flow is $1.4 billion. So it's a little more than 25% of their debt. Beautiful, beautiful. They could easily pay that debt. Also, look at how well capitalized they are here on the right. Short term slightly is about 33% higher than their liabilities. but long term, it's way more than triple their liabilities. So they have a lot of money. They're well capitalized. They're expanding their margin like crazy, and they have great cash flow. Maybe not as good as CGNX or Palantir, but a company getting a 91% net margin, trading down here, trading 34% off the highs. Does that make sense to you? Doesn't make sense to me. I like this one. So I'm watching Marvel. I really want to have my hands on some Marvel, and I will likely be running some plays on this this year, probably a lot of them. Okay, see what's next. Tyson Foods. All right, Tyson Foods. I think food stocks have been beaten down for a long time. I think these ones that are showing up in Costco and Walmart are really big ones. We're going to go to a monthly chart for this bad boy. Okay, we're going to go to a monthly chart for this bad boy. Why are we going to do that? Because there's something important to look at. Okay, one, we have this massive downtrend, right? Then we got a double bottom. If we get above this little section right here, which looks like it's at, let's take a look. Let me get rid of those drawings real quick. Looks like it's about $65. So currently we're at 58, so $6 higher. And then we have the potential for this thing to run all the way to 90. Okay, $90 from there. What's that on a move? 65 to about 90. We're looking at about 37%. 36 to 37%. Okay. We also got a TC indicator down here. Came in a couple months ago. You can see that the BX trender for the last 3 months has been green and growing. Basically, I mean, honestly, I'd be interested even above $61. Above $61, I feel pretty confident that this double bottom is probably going to come in. Okay. So that's what I'm looking at right now for Tyson Foods. And of course, something I say is financial advice and not a suggestion to buy, sell, or hold any asset whatsoever. You got to do your own research, come to your own conclusions. Ultimately, you are responsible for your own risk because investing is risky and you could lose it all. So always, always, always do additional research to anything I bring forward to you because it's your money. Protect it. Anyways, let's go look at their financials real quick. So their PE quarterly 39, annual 39, price of sales is 0.38, so they make way almost, that's ridiculous. Price of sales is 0.38. They could double up the cost of this stock and just have price of sales be break even. That's insane. Okay, that's insane. That's wildly undervalued. Let's take a look at their net margin. It's been like less than 1% all year for 2025, and it was 0.87% last year. They have pretty low margins, which is why that's only like food stocks are ones you would only trade in very specific situations. Let's take a look at their cash flow to debt. Like they have huge debt. They have about a 1/10 cash flow to debt. So that's not terrible, actually. It's not that bad. They could, 10 years, they could pay all their debt if they put all their free cash flow to it. They won't, but they could. If they needed to restructure debt, it wouldn't be too hard for them. They're only a $20 billion company. Only a $20 billion company. Okay, only $20 billion. And let's take a look here. So in this instance, so one thing I'd be a little bit weary of is this 200-month moving average. If we get under that meaningfully, we could drop all the way down to $16, $17, where that volume spike is there. That could happen. That could happen in April. Like if we get really bad news come through, the Fed doesn't cooperate, we get hyperinflation, some sort of other thing happens, this channel right here takes us all the way down to $17 pretty dramatically. So I wouldn't be buying it right now. That's why I'd say I want to wait till 61, and I would put a serious stop loss at the 200-month moving average that I would absolutely respect if it even touched it for a second, right? And then, because I can always get back in when it gets back above the 50-month, but if it craters there, like notice how it did go beneath it for a few months before, but like you could have waited out a wash sale to get back in and still would have been fine. Okay, so that's why I'm watching Tyson Foods right now. I think that there's a lot of return to these. Also, look at the daily. The daily is pretty. We got this nice stair step move. Now it's trying to negate that, but as long as it stays above this swing right here, that is still a stair step that could go higher, which would be, as long as it stays above 55.38, this step right here, still bullish. And then if it gets above that, boom, away we go. Okay, so we're watching all that stuff for Tyson. Let's take a look here. ARM Holdings. I've talked about ARM for years. I've talked about it since its IPO. I talked about it when it was $50. I've talked about it when it was $160. I've talked about it when it was 83 last year. Okay, so ARM has been getting absolutely decimated lately, and the reason for that, okay, the reason for that is because SoftBank, the bank that IPO'd them, has a whole lot of shares, and they've been using those shares as collateral for the OpenAI IPO. Okay, OpenAI is going to become a public company. SoftBank has been using billions of shares of ARM in order to backstop that company. So if that IPO doesn't go well, ARM is going to absolutely tank. That is why ARM is going down. There's nothing wrong with the company of ARM. There is something wrong with one of the major investors of ARM. Okay, so nothing wrong with ARM itself. Something is the risk is there are potentially billions of shares that could flood the market of ARM if SoftBank gets distressed as a result of the OpenAI IPO. Okay, that's what's going on. So we got this trend line, we got a break. We got this aggressive channel that we've been in. Okay, brutal. We could go back down to $80 if there's a bad flush in Q1 or Q2 of 2026. Okay, that would be an area I'd be very, very, very interested in buying at least 100, maybe 200 shares of ARM. Okay, very, very interested down there. Okay, so what is going on here? You can also see we've been in a channel ever since ARM IPO'd. We've been in this really channel between about 80 and 140, $150. We've been in that channel. Right now, we're about 2/3 of the way down to the bottom of that channel. In fact, this has been the bottom of the channel about twice now, where we currently are, before it went back up to $130, $140. Okay, so if it breaks this trend line to the upside, yeah, I'm looking at minimum 129, maximum 140 before we start to see it start to sell again. Somebody big has been keeping this zigzag pattern happening for years. Okay. And ARM is back in that area where it's a little bit attractive again. So let's go take a look real quick at the monthly. Yeah, see you can see it really well on the monthly. Look at that. Just an absolute channel from about 170 to $100. Anytime ARM hits $100, it's kind of a steal. And anytime it hits 170, I'd probably trim about at least 1/3 of my position, maybe more. Okay, look at that channel, just right there, just perfection channel. Boom, boom, boom. We're almost near the bottom of it. So watch that carefully. Of course, if we get something bad happen, 79 could be the lowest low, just like in last April. I don't think it will be, though. I think we might hit $100. We might hit like 98, 99 on ARM. But those would be areas I'd be super, super interested in ARM. Okay, very, very interested in ARM at that area. You can see the weekly BX trend, though, has not cooperated yet, though. I want to see that be lighter, but we are getting a preliminary orange triangle on the TC indicator, meaning this could be a bottom. It could be a bottom. It doesn't necessarily need to be because it's not green like back here when we got that nice run up, but it's time to watch. It's time to watch and pay attention, okay, on ARM. It is the time to pay attention. Now, one thing that could happen is we could come to the 50-week and crash back down, and that would suck, but it could happen. So paying attention to ARM. Let's go look at their financials. Let's go look at ARM's financials real quick. So ARM financials, okay. What is their quarterly PE is 181. That is insane. 143 for the year. 27x price to sales. It is insane. It is very, very high. It is very, very high. This is a risk, one of the riskier ones I brought forward. So, I mean, if you don't like that, then that's fine. You don't need to like that. They're a $120 billion company. I could see them being, 300 billion easily based on what part of the market they are segmented into. So let's look at last year. They made 19%, up 10% from the year before on their net margin. What about in 2025? 12 and 20. I mean, if next quarter does well, yeah, they're going to outshine last year as well with their margin expansions. But look at this. Okay, so yearly, look at how much cash they have. They have $2 billion of cash with $356 million of debt and a free cash flow more than half of their debt in 2024. In 2023, look at this. This again, this reminds me of Palantir. It reminds me of NVIDIA. It reminds me of many other companies that were just very, very, very well capitalized. Look at the quarterly for Q1 2025 and Q2 2025. Again, $396 million of debt, 178, almost as much. About a little less than half free cash flow to debt, which means they could pay their debt in 2 years just from their free cash flow, and $2 billion of cash just sitting there. In Q2, they matched their free cash flow to their debt. In Q2, they could have paid all of their debt that they had with just the cash flow from quarter two, from one quarter, and still have $2.5 billion just sitting around. And look at this. Look how well capitalized they are here on the right. Beautiful. This company not going bankrupt. Not going bankrupt. It might be expensive, but it's not going bankrupt. Okay. Worst case scenario, we could come back down to IPO levels around like 62, and that'd be an area I'd be super interested in ARM. But like, just look at this section here and notice that it has a top around 140, 170, a bottom around $100, and we are approaching that bottom currently. Okay. Let's take a look at Amazon. Amazon is retail, it is robotics, it is web services, it is AI, it is all sorts of things, and it has been going sideways for a long time. It's basically been sideways since November 2024, easily since that time, and I mean, arguably you could say from March 2024. So 2024 and 2025, it's been like a slow grind up, sideways up. All right, so let's take a look at the BX trender. It's looking good. We did get a hidden bullish there. I wish I would have seen that before. Boom, could have taken that off. It would have been beautiful. Okay, so let's go ahead and take a look at the 1 week here. So you can see we got this nice base here that we made, and I was in calls for Amazon, but it tapped my stop loss, and since I'm being pretty skittish right now, I got out. I should have held though, because a couple of days later, boom, popped off. Beautiful. Well, what can you do? You know, you don't know till you know. Anyways. We had a nice little cup and handle form here, and this could go actually a lot higher off of that. I wouldn't be surprised if Amazon closed the year out at $300, to be honest. What's the risk right now? So the risk right now is coming back down into this channel right here, which is going to be between about 238 and about 222. Okay, that's the risk right now. Notice how we popped out of it before and then came slamming right back down into the bottom. And right now we're popping out of it right now, and we could potentially come slam right back down into the bottom of it if there's some bad, larger economic news. Okay, that is the issue. That is what we're looking for. We're looking for something like that, some sort of catalyst that sends it, cratering back down to here, and then we're looking for that bounce up to take off, or of course, we're looking for it to take out those previous all-time highs and ride it up to $300. Okay, how's Amazon doing? I don't even think we need to look at the financials for Amazon. Amazon is just good. It has been. They got a PE of 34, price of sales of 3.86. Nothing too wild. Their net margin has been growing for 3 years, 9.29% last year in 2024. I mean the year before that. 2025 is looking like it's going to be a little over 11% for their average, so they're going to have a better 2025 than they had 2024 in terms of multiple margin expansion. You can see that they get pretty good cash flow on the annual basis. They have huge debt, but they have huge cash flow as well as huge cash equivalents. They could pay that debt easily if they wanted to. 2025 is not going to be so good because they've been spending tons of capital outlay on AI build-outs, so 2025 is going to suck. They might come back down a little bit on Amazon, and that's one of the reasons Amazon has been sideways, even though it has been improving its underlying business, because they've been spending so much money on AI, just like many other companies like Meta and a few others. Okay, so that's Amazon. Let's take a look at Apple. I think Apple's big thing is they're lagging on the AI. Okay, they're lagging on AI. You can look. I mean, look at this though. I mean, just from the summer until early December, Apple was great, and then it started falling off again. And I think it could fall off a little bit more. I think it could fall off just a teensy bit more. I think we could see this thing come down, hit this line right here, hit the 200-day moving average, and then start crawling back up from there. I'd be watching for that. I think it's very possible it could do that. Don't be super surprised if it does. Okay, we're getting that nice little sell-off. We hit the 20-week moving average. That's usually an area of reversion. We might pop it back up to the 50-day from there and then continue on. We'll see. We'll see what happens. You can see that the BX trender is saying, yeah, we're probably going to go a little bit lower. Let's take a look at the weekly one. The weekly one, yeah, it says we're probably going to go a little bit lower on Apple after we had that nice run up there. So I do think, again, there will be a dip first. I think there's a dip coming first. And once that dip is logged and in, we could see it. Maybe I'd be looking at about 229 at the low end, 229 for that if there's a really bad dip, and then go. I mean, unless it's like a crash, and then $200, but I don't think that's the case. I don't think that's going to be the case at all. Yeah, I would watch that the 50-week, right? Because we had this nice little trend here, right? And then we got this little trend right here. I wouldn't be surprised if we came down, hit the 50-week, and then started going higher from there at 241.58. And I wouldn't, again, be surprised to see Apple end the year at $300, especially if they really nail some AI in the phones this year on the iPhone 18. Okay, so watching that. Okay, Oscar Health. So let's take a look at Oscar Health. Oh, wait. Gotta look at the financials. Gotta look at the financials. So again, their PE 34, price of sales 9, not much different from Amazon. Go the annual. So they've been increasing their margin from 2024 to 2025, pretty good. So 23 to 26, 3% more. Not bad, not bad. They've already reported everything. Not too bad. Nice increases, but they fell anyways, so that sucks. But look at this. Look at this. Cash flow to debt. This is the annual. Look at their they have huge debt, but look at that cash flow. They have almost as much cash flow as debt for such a huge company. That's insane. That is insane. Look at that. Just every year, boom, 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 over and over and over and over again. This year, even with all this AI spend out, like all this spending that they've been doing on stuff, like look at this, boom. They don't have as much AI spend out as some others, but which is why they're probably not getting absolutely decimated. But like, look at this, their debt is huge, but like if you go to the annual, their cash flow is also huge. So I'm not too concerned about Apple. I think they'll do well. I do think that we're in for a little bit more pain, but if this turns out to be a bull flag and come up, test a little bit and go on, then I'd be saying like around this same area right here, this little volume node right there, I'd be saying, yeah, we're probably going to go up to 300 from there if we decide to go up instead of come down. Okay, let's take a look at OSCR Health. Okay, OSCR Health. This is a healthcare stock, much like UNH. It's all about premiums, collecting premiums for insurance. The Affordable Care Act got expanded by 3 more years just yesterday, I believe, and you can see they went up nicely. OSCR had a nice couple of days of run up as a result. Okay, so let's stay on a larger time frame. So notice how this thing's been. Okay, this is its entire history, right? We came down, scooped, broke that to the upside, and we've created a new channel between about $16 and $24. We currently touched the bottom of that channel. The top of the channel is back at $24. So we're at 17.73. We could go up as high as 24 easily off of that before we hit the top end of that channel. If we take that channel and go above and tap it and don't go back into it and then start climbing again, OSCR Health could return to high 30s, maybe 40s. Okay, and that's it. That's the truth. That's just the truth of it. That is what can happen. And I don't really think it's going to go much lower than, say, this volume spike here. It's a healthcare stock. People need healthcare no matter what. It doesn't matter if it's a recession. If you need to see a doctor, you need to see a doctor. Nobody cares what the economy is doing if they're sick. Okay, so yeah, we're looking between, was at about 24 and a low end of about 12. Currently, we are in the middle at about 17. So like anything below the 200-week moving average, I'd probably let it go and reset. If it went below it, if it touched it and I wasn't in yet, I'd be like, yeah, I'm going to be buying at the 200-week moving average, and I'd be selling around 24, at least a third of that position. Hold on to the rest of it, maybe even half, and then see if it's going to keep going or if it's going to come right back down to 17, 16, 12, something like that. So we're watching OSCR for that. I think OSCR, if it can get above 24, I think it's going to have a little breakout and see it come up to about 36, 40 bucks, which would be from current values an increase of a 100%. That would be a 100% increase, and that's pretty exciting, I think, personally. All right, let's take a look at their health, at their financials. So if we go down here, currently not a profitable company. Oh no, they are. PE of 140 on the annual before, but it's not showing up here. Price to sales of 0.39. Okay, so they do more than double the sales in terms of what they're valued at as a stock. Very interesting. They're a $3 billion company, so they can obviously expand immensely from where they currently are. Let's look at their net margins. In 2024, it was 0.28, and it was negative before that, so they were positive in 2024. In 2025, it had 9%, and then -7, and then -4. So if Q4 of 2025 comes out positive, they might actually eke out a positive net margin for the year of 2025, and that'd be pretty good for them. Take a look at this. So this is what makes them a little risky. Notice how they're negative on the free cash flow. They have huge assets though. Like look at their they have $9 billion in cash. In premiums earned versus 1.36 billion of premium of liabilities. So there you go. That's not bad. So I like this overall. I think they have a bright future, especially with those benefits being expanded, and that's on my list for that reason. Let's take a look at Vistra. I'm going to start Vistra by looking at the financials. Okay, I'm going to start Vistra by looking at the financials because the chart looks terrible. Okay, first of all, they're trading at a PE of 53, which is a bit high, but not terrible. Okay, especially these days. Not terrible. Their net margin in 2024 was 13%. In 2025, Q1 was -5, then we had 8, then we had 12. This is why they got punished. They had a significantly lower net margin from 13%, and they were like negative, and then it was 8 and 12. So Q4 of 2025 is going to have to be way bigger, and it might be because some of these deals have been coming through. Okay, now let's go look over here. Okay, so they have huge debt, not tons of cash flow, but they're in a sector of the economy that is absolutely critical. They've got energy, right? Energy distribution, nuclear. They're making deals with hyperscalers for this energy. I think Vistra has the potential to come back. Now, one thing that has me very interested is this little wick right here on the weekly. See that wick right there? That's beautiful. That's a really well-placed wick at the bottom of the range too. Look at that, right on the 50-week moving average. Last time we touched the 50-week moving average, what happened? What happened last time? We moved up 84% last time we did that. What about the time before? What about the time before that? We hit the 50-week moving average right here, and it went up so high I can't even see it. It went up 197%. Very interesting. Notice as well that the BX trender seems to think that buying pressure is starting to come back in, or at least selling pressure is loosening. Okay, that's pretty exciting. We go to the monthly. Buying pressure has not started loosening yet, but look at that. We hit the 20-month moving average, which again, every time we've done that, we've had a pretty big explosive move up. Now, you could have told this was the top from these 3 months here, because look at those wicks, right? But now look at these wicks on bottom. Every time it pushes to a new low, somebody's buying. Okay, I like that. I like that a lot. Let's go look at the daily. Okay, daily is very interesting. I think we got a death cross here, which could result to the upside. We'll see. Once it's back above 172, I'm looking for a move up to 200 on VST. Like, look at this. Let me draw a thing for you. So we've had a nice downtrend, right? Then it started to soften, and now it's going sideways. The next step is for it to softly start going up, maybe go sideways a little bit more, and then start to aggressively go more and more parabolic. Maybe even making a really nice cup. Let me draw that cup for you. Maybe making a really nice cup. So we're going to pay attention for that. That's what I'm watching for. I mean, back here it was dramatic, right? It just went straight down, big channel, made a double bottom. As soon as it got above that, made a little flag, and then away we go dramatically to the upside. I don't know if it's going to be like that this time. We'll see. We'll look for it. We'll look for the signs. But I think VST, given that energy is so important to the United States economy right now, I think VST has potential. Let's take a look at the last one, Target. So Target, why Target? Target largely because it has been absolutely decimated for years. Look at this thing. Look at this thing. It's just been down, 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 down for years. Okay, and we created a nice little base down here, right? We're starting to break out of that base. We break out of that base, we're looking at this volume spike here, and the next one right there. So we're looking at $130 to $150, which would be just tapping this structure up here from beneath. And I think we'll fail there. I think it'll fail because I really don't think Target is all of a sudden going to become as profitable as Walmart or Amazon, who they have trouble competing with. But I think they got oversold. I think they got dramatically oversold. I think they've got another 20 to 30% up move in them to come up to 130, potentially even as high as 150 or 160. I think it's going to likely tap this structure here from beneath, right? Something like this, right? And then maybe come back down, consolidate here a little bit, and then maybe come back down here and then make a new channel between 110 and 120, and that might just be where they live for a long time. But I think 2026, as you can see, it's already started, and I've been talking about it on the channel for a while here, and in the membership section. Like, it's been like we got that double bottom, we confirmed it here. This will likely continue to maybe do a little sideways action, and then we're going to go higher. Wall Street has decided Target has had enough pain, and they're ready to rebuy it again. Go back to the monthly. Look at this. On the monthly, same thing. Nice double bottom. We're getting above it as soon as we do it. Next target, 130. Okay. Look at the BX trender. Softening selling pressure for a while. Fast stochastics are coming out of oversold territory. The slow stochastics are looking like they're getting ready to come out of oversold territory. It might only come as high as the 50-month moving average, but you know what? That's a pretty sweet gain from currently where it is. All right, let's go look at their financials. They're going to be bad. but we're going to look at them anyways. This is not a fundamental play. This is a Wall Street has decided that it's been oversold play. It's at 12 PE ratio, meaning that they are in value territory. Their price to sales is 0.46, meaning their stock is worth half of how much sales they're doing, which is embarrassing. Their net margin has been bad. Look at this, 0.432. It's been going down. 2024 is 3.48. So this, if Q4 2025 can be some sort of improvement, yeah, they're going to get even further backing. And if we look here, their cash flow to debt, like they have huge debt. Their cash flow though is not terrible. It's a little less than 25% of their overall debt, but that means 4 years of free cash flow could pay off all of their debt if they really wanted to go into austerity measures. Okay, they don't have a lot of cash, but that's okay. They're a retailer. They don't need that much cash. They just need to survive on the margins. Okay, so I think Target will have that for that reason. All right, let's go look at the other stocks I'm watching here. So Netflix, right down here in the middle there. I'm starting in the middle with the Mag 7 stocks. We're going to talk about those first. Netflix, it's beaten down dramatically over this contract they're working on with acquiring Paramount. So that's going to be pretty, not Paramount, acquiring Warner Brothers. Excuse me, they're acquiring Warner Brothers. They're trying to, Paramount is their competitor in this deal and has been giving them a run for their money. But once it is resolved, I think Netflix has a great opportunity to go a lot higher as a result. And currently it's down in the 80s. I think it closed in the 80s. We'll do a quick look. Currently Netflix is down. Yeah, it's closed at 89. It went as low as, I think, 88. It could go a little bit lower. It has the potential to go a little bit lower, but I would not be surprised to see this end up being the base around here, somewhere around 80, maybe even high 70s for that 200-week moving averages. And from there, if I wouldn't imagine it going much lower than that before turning around, unless that deal falls through or it's like something terrible happens to it. Okay, so next one, Tesla. I'm pretty interested in Tesla this year. A lot of stuff's going on with them. They have been coming down though, so I am kind of waiting to see what happens. I did that analysis on them before, but right now it looks like they're kind of doing a bit of a bounce with a potential further drawdown to the high 300s, low 400s before climbing back up. But Tesla, I'm very interested in on the back end of the year. They're in solar, they're in batteries, they're in EVs, they're in robotics, they're in AI, they're in all sorts of things. Very, very interested in Tesla. Now, I do think that when SpaceX IPOs, Tesla may take a further dive because a lot of the wealth, like the value going into Tesla, is because of its exposure to Elon Musk, who also runs SpaceX. So I think they will lose some of their power for pricing that stock when SpaceX is its own company as well. So watch out for that. We might see Tesla do a bit of a dipperoo and then climb higher afterwards off of all the other things it's got going on. Google. I think Google is going to be the strongest AI dominant company in 2026, and they're also working on quantum. Remember, they're also the best quantum stock. So they're the best AI stock currently, and they're going to be the best quantum stock too at the same time. Google is an unstoppable beast. Basically, any pullbacks on Google, and I'm interested in acquiring more Google. So that's it for the Mag 7 for me and what I'm watching. Now let's go over to the AI enablers. Micron, the RAM shortage. That's going to keep getting worse for a little while here until they decide to expand production. Once they expand production, though, I think they're going to make even more money. So I see that they're absolutely critical. They're absolutely critical for AI infrastructure, and that infrastructure cycle of hardware cycle for AI, it's gonna be a little bit cyclical, like with gaming, like with computers, all that sort of thing. It's like it's not every year massive dominant demand, but I think since there's such a shortage, it could continue on a bit longer. MU could continue to go higher, so I will be watching it. If it shows signs that it's going to crack and fall apart, well then I'd step away from it, but that's why it's a notable mention, not on my top 10. But I am watching it. STX, same sort of thing. Storage is extremely important for scaling AI. And they make some of the best storage out there. So Seagate is on my list for that as well. Again, they are crazy high. They could fall because that hardware cycle might be coming in here pretty soon. But I am watching it for any dips to see if they, if it's going to hold and potentially go higher. NBIS, you've seen me trade this before. I'm going to continue to trade it some more. I like it for they do data centers. They're the biggest one in Europe. They're going to bring AI to Europe. They also have expansion within North America. So NBIS is on that. That's they're little, in my opinion, I like them better than CoreWeave. I like them better than IREN. I like NBIS overall for AI buildup personally. Okay. DigitalOcean, they're basically like a marriage between Palantir and Snow for mid to small scale companies. I am watching them for that reason. They give the the AI data sorting like Snow, as well as the inference like Palantir, to the actionable items like Palantir, in a more affordable package for smaller companies that may not need or cannot afford a Palantir Snow in conjunction to run their systems. I think DigitalOcean is going to be for those small to mid-sized companies that want to deploy AI decision making, much like Palantir or Snow, but for on the cheap. So DigitalOcean, I think, is going to be there for that, and they're going to do, I think, pretty well. And this is a chart I will show you. Okay, this is a chart I will show you. Look at this beast. Okay, so this thing has been in a range here for a very long time, since like 2022. It's been at the bottom of that range. Currently, it's at the top of that range. It's currently at the top of that range. It would need to break out, touch from above and go. But once it does break out from that range, we're right at the shelf right now. We're actually just barely peeking our heads above it. Once we're above that, yeah, this thing can go to $100. This thing could go 135. It could go even higher. I don't see anything really holding it back. Also, look at this nice bullish rising triangle. Let me do that a little better. This nice bullish rising triangle that we're coming out of right now. It is beautiful, 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 beautiful. I wouldn't be surprised to see it come tap from above and continue on, or to just see it continue to blast off from there and then just kind of stair step on its way up into the 80s, 90s, 100s. I like this a lot. I also like this really big scoop. I like that it came down a bit and then made the triangle, and then boom, off we go. As long as we can hold that trend line on the way up, I think we're looking at something special here for DigitalOcean right now. And that's on the weekly. Let's look at the daily. How's the daily looking? The daily, we hit the 9. And like nice wicks on bottom. I mean, once it's back above 54.41, I think DigitalOcean has a chance to just continue carrying on. How high are we above the 50 week? Let's take a look. Or sorry, the 50 day. We are currently about 11 or 12% above the 50 day, so we might come down a bit. We might come down to like 50. We might come back down to the 20 or so. But I like it. I like it a lot, what I'm looking at here for this right now. And over time, I'm pretty excited about DigitalOcean right now. Okay, let's take a look at the next one, Snowflake. You've seen me trade this back and forth a couple of times. The most recent trade, if you're in the member section, was a bit of a loser, but Snow is one of those ones. The data stocks are starting to reset, and I'm very interested in it. So Snow's been falling for a while now. It's been falling, and it's finally starting to come out of that downtrend a little bit. So we got this one here, right? But we also had this more aggressive one right there, where it's getting out of that channel and it's going sideways. And you know what happens after it goes sideways for a little while? It tends to break out, as long as it has a reason to, which could, that reason could be coming up pretty soon. Right now, I would watch this trend line that I just drew. I would watch that for an area where it could potentially fail at and come back down to the bottom of the range. So I'd watch that carefully for Snow. I don't think we're fully out of the woods yet, but yeah, that's it for Snow. There, they organize the data for usage with a platform like Palantir, and I think that is going to be a big step for inference, and they're going to be very helpful throughout that whole process. Okay, let's go look at Intel. Intel has been doing exceptionally well lately. They are becoming more and more of a foundry, and I think that will continue on. I think Intel will start to eat the lunch of Taiwan Semiconductor here over time. There's a systemic geopolitical risk to Taiwan Semiconductor, so it is just within the interest of the United States to fund Intel and make Intel a serious competitor to TSM to make those chips here at home in the United States. No geopolitical risk, no risk of realignment with other powers, no risk of being taken by other powers. None of that. It's just in the United States being built. So once they are showing themselves dominant, I could see Intel doubling, tripling, maybe even more over time, because they will become that player. We may even see a world where Intel stops making their CPUs just to focus on foundry. I'm not calling that right now, but I think that it's possible because, I mean, look at how much more TSM is worth than Intel overall just by being the foundry. They wouldn't need to make the chip. They wouldn't need their own chips if they got as good or better than TSM at making chips. Then they could just make the chips and be even wealthier by multitudes than they are currently. So I think that's, and the government is incentivized to push them to do that. So I think that's probably a big possibility on Intel, maybe not this year, but over time. Applied Materials, they make materials for semiconductors. They're very interesting right now. This is another chart I'll show you real quick. Applied Materials, these are going to be really important as well. Here for a while, you can see it's already high up there. And I'd probably wait for this to come down. I'd probably wait for this to come bounce off of this trend line again. So like boom, and it just continue to bounce on it. And as long as it doesn't break it and come back down to like 160, then I'd be, pretty confident that this trend line will be just the stair step hop as it goes, and it goes, and it goes, and it goes, and it goes. So right now, yeah, we could probably see it roll over a little bit, come back down to maybe 271 or so on AMAT, but it's a notable mention. That's why, because it's really, really high up there already. But I wouldn't be surprised to see it just bounce off that trend line and just continue going up higher and higher. The other one, New Scale Power, SMR. They make the modular reactors. They have the only approved design for a modular reactor in the United States. They're probably going to be the first mover on actually deploying one and being, a big partner with a hyperscaler in order to provide that undisruptible nuclear power. SMR, I am positioned in SMR already. I've been accumulating shares of SMR. I'm already up an okay amount, like 8-9% on my shares of SMR. I do like this one for that. Energy is the chokehold. We need to double, triple, quadruple our power output for electric power in the United States. I mean, we need to double it just to match China, and we need to do more than that to match them and then some. So power is going to be exceptionally important in the next 4 or 5 years, maybe even up to 10 years, and we just need to build it out. And we need it now, not yesterday. We need companies like SMR with approved designs now, not 2-3 years from now. We need them to be deploying those modular reactors ASAP, not 10 years from now, or maybe we'll get to it when we get a design that works, sort of situation like with so many other of the nuclear companies, which is also why I'm looking at VST, because they run nuclear power, they run clean energy, they have a huge backlog, they're getting huge deals with hyperscalers already. I'm just thinking SMR will probably be the first mover in that modular reactor realm to get a nice big bid from a hyperscaler, so we're watching for that. Okay, that's it for that page. Just one more page of notable mentions. All right, we're going to talk about healthcare. So mRNA, PFE, those are going to be pharmaceutical companies. They've been beaten down dramatically. We'll show you those charts real quick too. mRNA. If we go on a weekly chart, you can just see it has been absolutely demolished. It had that 2021 run. We came all the way back down to its IPO prices here recently, and we're still hanging out there. And I don't really see any reason for it to remain that low this long. So once these things start to break out, and they have begun to break out, I'll be looking at this one to go back up to the 200-week moving average, maybe even get back up into this between 160 and 120 range on the chart as it goes back up, as money gets easier, as drugs are easier to make with AI, as we see more just money funneling through healthcare. That has been beaten down for a while. We've been seeing healthcare trending for a while now. I think it will continue. Okay, same with PFE. Same thing with Pfizer. Same situation with Pfizer. Look at this. Pfizer had that 2021 boost, right, and then just cratered. It cratered back to prices that we haven't seen since 2012, since 2012. Okay, prices we haven't seen since 2012. I don't think Pfizer's going to stay down there forever, and I think it's starting to see a bid come through. Now, this could be exactly like this little scenario here where we came up, went sideways a bit, and then just went further down. That absolutely could happen. So we are waiting a little bit on Pfizer for it to break this triangle, preferably to the upside, and then carry on. That 200-week moving average up at about $30 currently, and then maybe break that and go even higher. We'll see how that comes out. This is one we already went over. So there, UNH, they just like OSCR, they've Continue the ACA funding. So United Healthcare, is the biggest insurer in the United States, will likely benefit from that. I don't know why Snowflake is also on here. That should ignore that one, or why SMR is also on here. As you can probably tell, had an LLM put this one together for me. Because it's way faster than me, but it made some errors. Anyways, yeah, same thing, same idea with UNH as with OSCR. And NVO, Novo Nordisk, they're the premier GLP-1 company. And they have been releasing a lot of really good products out of it. They've been beaten down for a while, and they started breaking out. In fact, I was up over 90% on my NVO calls on Friday. I took some profit at 60%, let it run up a little bit. It closed Friday at about 45-ish%. But if you're in the stalagmite level of the channel memberships, you got alerted to that, and you've seen that happen in real time. If not, I'm telling you about it now. NVO, we got in before that big pop-up. It's been a really good ride so far. I think it will continue to go higher and higher. If you've noticed, GLP-1s have been getting pushed a lot for a lot of different reasons right now, and I don't think it's going to stop anytime soon, and NVO is the big player there. Then, of course, we've got energy plays, EOSE, zinc batteries. Those zinc batteries are super important. They're way better than lithium for so many reasons. They are not a fire risk like lithium. They last through more charging cycles than lithium. At high voltage charging, they actually repair their internal parts, versus lithium that starts to deteriorate at the higher voltages. EOSE zinc batteries actually repair themselves, so they're going to be much longer lasting. No fire risk. Can you imagine a fire breaking out at a power substation with its lithium battery? They cannot put out those fires. If you've seen those videos of electric cars on fire on the freeway, the fire department just lets them burn because they cannot put them out. That would just absolutely decimate entire areas for power consumption that are trying to consume power, like big blackouts if lithium batteries were to catch fire. And as you can imagine, that could be a huge risk for national security if we were just running, lithium batteries at major stations, power stations, and if God forbid anything were to happen in that scenario where they were attacked and just you couldn't even do anything about it while they were just burning. So no fire risk with the zinc batteries there, and they are already working on grid scale batteries at EOSE. They are risky. They're riskier than a lot of other plays out there because they're not profitable or anything yet, and it's a new technology, but it's very promising. American Electric Power, big utility power. I like them. I'm watching them. Duke as well, which isn't on this list. DUK. It's another one I'm watching as well for big data center power production and providing that to them. The other one, rare earths. I'm looking at MP and USAR for rare earths. The United States is going to start making its own rare earths. They can't rely on Chinese rare earths anymore, and they shouldn't have been doing that for years. So yes, those ones are going to get backstopped by the government. They are going to likely maybe not shoot through the moon, but they are going to go up from where they currently are. They've fallen dramatically, and I think that they're going to start coming back up this year, especially as we're doing big defense buildups globally. When you know what that means, lots of money floating around. And that brings us to, I don't know why this landed in financials, but LMT, Lockheed Martin, that's a big one I'm watching as well. They have huge backlogs of government contracts for defense projects, which will, of course, require the products of MP and USAR to complete because they're in basically everything. And that defense budget just keeps going up and up and up. They're going to increase it by $500 billion next year. So, yeah, you can imagine that a lot of that's going to land in the pockets of LMT. It's going to land in the pockets of USAR. It's going to land in the pockets of MP. And you better believe it. It's also going to land in the pockets of companies like Snow and Palantir as well. Financials are going to be really interesting next year. I think I'm watching Bull, Webull. This got really, it started to forget how to do stuff down there. You can see Bull, I'm watching Webull. I think they're going to have a bit of a SOFI moment here at some point in time in the near future. They have some hits to them in the past, but I think they're probably going to work through those and come through. Bull is, I think, going to be very interesting, especially once it starts deploying crypto again and doing tokenized stocks. I think that'll be very interesting and a big tailwind for Bull in the future. And then I'm also watching things like Goldman Sachs and JPM, especially after that announcement yesterday that credit cards can only have a 10% interest rate on them going forward. We'll see how that shakes out, and if the market doesn't react to that, well, then you better believe I'm going to be watching Goldman Sachs, JP Morgan, Bank of America, Citibank, all that stuff for potential up moves, but Goldman Sachs is the biggest one, so it gets the notable mention. Staples. So food, I think, is going to be a big theme. I think food is going to be a big theme. Maybe not next year, maybe the year after, maybe the year after that, but at some point, these companies that have been absolutely decimated over the last few years because they're value companies and value stocks have been worth nothing lately because it's all been about the hype. I think they start to come back. General Mills starts to come back. Conagra Brands starts to come back. Treehouse Foods is already starting to come back. Costco starting to come back already. Those are going to be your staples, your food stocks, your shopping, that sort of thing. And I'm watching those ones in particular because Costco is just, everybody loves Costco. Everybody knows Costco. It's you're not going to stop shopping at Costco anytime soon. Treehouse Foods, you may not have heard of them. They do private label food for grocery stores, and that has been the #1 growing food brands for many stores in terms of their sales because consumers view them as good enough for significantly less cost. So Treehouse Foods, get it on your list. Conagra and General Mills, they also do some private label, not as much, but they have been beaten down dramatically. They have some pretty big dividends that they pay, and everyone's got to eat. So I think these ones will have some very interesting moves going into next year. And with that said, let's get into the Hail Mary plays that are going to zero or hero for the year. Well, I'll just go over them real quick. Data Vault, that's going to be similar to digital to Snow or DigitalOcean, but they're very small. They have a big contract coming through that may help them go higher. BBAI, Defense AI, a lot like Palantir or some others. Soluna Holdings, for obvious reasons, we talked about that a lot. Soluna, they have a big power portfolio. They're building it out, AI data center power. It's going to be infrastructure play on them. They could see a similar rise like Iran at some point in time, but again, big Hail Mary play. KR, KNF, they do underwater robotics. They do underwater autonomous robots, so autonomous subs for defense market. That is going to be a big deal, especially with what's going on in the world's oceans right now. I think that they are going to end up being a major player selling the U.S. Big machines. Rytech Robotics, again, robotics, cornering that robotics. They already deliver robots to like restaurants and some other areas like that. So that's going to be a big deal for them. Bitmine, Ethereum is going to become a big layer for financial finality. BMNR is at the cornerstone of that. Arcat Holdings, military drones. We've talked about that a whole bunch. I think that's going to be a big thing as well. That's it. That's everything that I'm looking at for 2026. Go ahead and comment down below which ones you think are going to take off. Which ones do you think are stupid? Which ones are you looking at that aren't on this list? Smash that like button if you like this content, you want to see more like it, or if you want me to dive deeper into any of these tickers or any others for 2026, let me know. I'm happy to do it, ready to go. Check out the channel memberships, especially that soda straw level where you get the TC indicator, you get the daily SPY thoughts, you get the scanner results every day. And the stalagmite level where you get the real-time trade posts and members-only videos. With that said, have a profitable day.